Hello, this is Bharat Bari from the class Financial and Accounting Skills for Managers. Today, in my presentation, I'll be applying the financial knowledge that I have learned throughout the course of corporate finance for the insurance industry, where I'm working as a business development manager. Uh, and This course was under Professor Dr. Nima Salami. So let's get started. The agenda for the presentation is I've kept it very simple. First, I'll discuss the course relevance to my work, and moving on from there, I'll talk about the application of these relevance topic with my job. So, talking about the first thing, the course relevance to my work. Here I'm gonna discuss four main points. One about the double entry accounting. Second is about the financial statement, analyzing them. Third is about the decision making, how this course helped me in making good decisions or right decisions in particular, and the concept of time value of money. So, talking about the first one, at the very heart of accurate financial management in any industry, and especially this insurance industry, is the understanding of this double entry accounting. This knowledge allows us to meticulously, accurately record our financial transactions regarding the premiums, claims, and the commissions that we get, uh, and keep it very transparent, because this transparency in the financial statements not only ensure our internal business operations that will run smoothly, but will also build a strong foundation with the clients, with the strategic partners, our associates. So this is generally done with the trial balance and the balance sheet that the company maintains. And one of the important you can say concept for seeing that whether the transactions that and transactions that we have lodged in our share balance sheet, financial sheets, is based on the assets, on the formula, which is the assets is equal to liabilities plus the equity. So moving on from there, analyzing the financial statements. So the ability to dissect and analyze financial statements plays a very important role in assessing the financial well-being of a company. And looking at the year-on-year return, uh, how much return we need, and to break even, if we have raised capital, then from multiple sources, what is the weighted average cost of the capital, and what should be the return for the company, and what the financial statements look like tells a lot about the financial health of the company, and which is very important. So uh, that actually tells us whether the company is gonna sustain or not. So in the case of insurance, what I can say is that if we identify the trends of the claims and the loss, or the claim ratio, the loss ratio, uh, we can refine our products and the offerings and tailor our services to specific segment of the market, enhancing our competitiveness, and that will help us to increase the returns on the services that we are providing. So the third point is the managerial accounting for the decision making. So as a business development manager, we often find ourselves immersed in decision making process. It's very important that we can make good informed decisions, and at the right time. uh, Here the managerial accounting principle become our compass. So uh, to navigate the pricing strategies, or uh, the decision about the new products, it's very important that we understand the uh, core concepts of the financial accounting. And one of the basis of doing that is the NPV and the IRR, whether a project that we are going to take is a feasible project, whether the return will be good or not. So this was one of the best concepts on which multiple companies decide whether to take on the project or not, based on the feasibility, based on the profitability, based on the return to the company that the project will generate, not just today, because in the net present value, which is NPV, we adjust the value so that what is the current present value of the project is calculated, which is a very simple the present and the future value uh, uh, formula. And so this is very important because when we make data driven decision on the insurance products or any products, we ensure that they are not only attractive to the potential clients, but also aligned to our profitability goals. So for the company, it's very important that they also maintain a good profit margins so that they can sustain in this competitive world. The time value of the money is the fourth concept, which is, I think, by far the best concept of this course, because this thing gives us uh, a new perspective to the money. Uh, the basic principle is very simple, that uh, uh, the value of money, what today is not equal to the value of money, the same amount in the future, because there is an investment that we can do that can generate a return. So $100 invested today may return a 5%, may make a return of 5%, and this 100 will be 105 next year. So this is very important concept. So especially in the long-term investments, this principle really shines. And if we talk about in the terms of insurance, where the long-term investments are normal for the people who are like doing some kind of um, uh, who are buying some insurance product, and that's gonna generate revenue after say 30 years, so like a term insurance or something like that. So that is something uh, we have to look into, so that we can provide a very competitive pricing on those products. So the time value of money, especially in budgeting, is very crucial to understand and apply. Moving on from that, how we can apply these learnings at my work. The main 3 points that I'm going to discuss are the product development and the pricing, how we can price it. Second is the market expansion and making new partnerships. And the third is the strategic resource allocation. So whatever the resource we have, how to allocate them correctly. Talking about the first point, uh, applying accounting principles in product development ensures that we design a product offering that offering a very right balance between an attractiveness and profitability. So any person who is buying, who is our client and buying our product, should be attracted to that, and at the same time we should maintain a profitability that with which we can sustain for long terms, and we are also satisfied with that profitability. So the product development and the pricing is very important in those cases. um, Especially in this competitive market where a lot of insurance companies are there, a lot of insurance brokers are there, and uh, in that competitive market, it's very important that we safeguard our financial health while maintaining a proper amount of competitiveness in the market. So, with the financial analysis as our guide, we can set competitive premium rates while safeguarding our financial health. Moving on to the next slide, market expansion and the partnerships. So, it's very important when considering any kind of market expansion or a potential partnership that our financial knowledge is up to date, and through which we are being guided uh, about the valuation and the risk assessment. Uh, in market expansions and the partnerships, risk evaluation is very important, especially when somebody is expanding by buying a company. A concept that we learned in the class is the stock valuation, and why that is very important, because in the market, the stock might have a value that is influenced just not by the financial capabilities of the company, but also with the market's sentiment. But the correct price of the stock or of the company can only be determined by looking at their books, what kind of returns that the company is giving to their investors or the shareholders, what kind of dividends that has been given by the company. So when we are expanding, when we are making a partnership, this knowledge uh, drives that contract that we will do. So having this kind of knowledge is very important, especially for a financial manager or a corporate manager, so that they can make a decision not just based on the sentiment of the people, but a very informed decision, so that the partnership result in a very healthy collaboration or a very healthy union. Moving on to the next slide, strategic resource allocation. So, hmm, every company has resources, let's say, and how they are allocating those resources plays a very important, very crucial, and instrumental role uh, in deciding the progress of the company. Uh, so, our grasp of the capital budgeting and the time value of the money will help us do this correctly, and especially when we are taking ambitious projects. So making well-informed choices is very, very important, and allocating the resources according to that. Whenever we are expanding, whenever we are taking on new ventures, or setting our long-term business goals, so the resource allocation is very, very important. And um, based on the books, based on the concepts, uh, like uh, the project cost, or understanding how, what is the say sunk cost in that, and what will be the return on that, and how we can see the NPVs and IRRs of the project is very, very important. And according to that only, we can make a strategic decision that can help us in long term. So, uh, moving on to the conclusions, the very to wrap up all this, if we talk about the key takeaways from today's presentation, we have seen double entry accounting that will help us keep the things clear, uh, concentrated, and trustworthy with the clients and partnerships. By looking at the financial statements, we get a very intelligent insights to make good choices, especially highlighting the managerial accounting part, which helps us figure out the prices, the cost, and everything, while understanding the value of the money over time. Uh, we can plan ahead, we can invest better, and we can use our resources wisely. And staying curious about the new products will help us stay ahead, but only when we are making the right decisions. So, as a business development manager, it's very important that we understand the market, we understand the partnerships, we do a very strategic partnership, and which can benefit not just our partners but also our associates. So, moving on from that, the growth and the progress, I believe that any business just uh, uh, in terms of finance wants to see growth and the progress of the company, because any institution, any financial institution is a profit based, profit making institution. So with each policy that we create, with each partnership that we build, with each step, each brave step that we take, we are using these financial skills to create a path to success, not just for us, but for our customers, our company, and ourselves. Uh, Thank you. Here are the references that I have used throughout the presentation, and Now I just want to thank you for your attention. Thank you for joining me today. And I look forward to any questions or comments that you may have. You can contact me at the details provided. Again, my name is Bharat Bari, and I thank you today for listening to me. And I'm glad that you are still here. Thank you so much.